Welcome back to the price action trading course. So this is part 4 of the price action trading course. That if you haven't watched part 1, 2 and 3, then make sure you watch them, otherwise you won't understand a few concepts in this video. So in this video we are going to be covering trend reversal chart patterns. So by the end of the video you will know how exactly you can trade trend reversal chart patterns, where to exit, where to enter, and where you should place your stop loss. We will discuss the psychology behind them. We will go in depth and discuss what is the logic behind the patterns. So a very quick announcement that I made an Instagram account for the Alpha Trader. I post every single day. I post trading content. I share my analysis. I share trading ideas. So if you would like that, consider hitting the follow button. I will link that in the description. So now let's get started with the first pattern that we are about to discuss. So now the first pattern that we are taking a look at is the head and shoulders pattern. So now this is a bearish reversal pattern. That means this pattern reverses the uptrend towards the downtrend, and that is why it is known as a bearish reversal pattern. So over here you can see that the uptrend is going on, a healthy uptrend is going on. You can see higher highs, higher lows, higher highs, higher lows, and another higher high is formed, and then another low is formed. This is also a higher low. If you analyze the trend, it looks like a very healthy uptrend, so there's nothing wrong with that. But then if you look at it, a higher high again forms. So even at this point there is no issues with the uptrend because it is going very well. But now when the price comes down, it does not form a higher low. The low that is formed is equal to the previous low. This is where the buyers get frightened, and now they realize that the trend has become weak at this point because it failed to drive the price higher and it did not make a higher low. So this indicates the weakness of the trend. And then you can see, like I said, the buyers get frightened, so they do not enter again. So the new buyers do not enter as the price did not make a higher low, and hence the price makes a lower high. The price fails to make a higher high and it makes a lower high. So this confirms that the trend is about to reverse, and then we can see the price breaks below and then continues towards the downside. Now we will discuss where you can enter, exit, and where you should place your stop loss when you are trading the head and shoulders pattern. So let's look at a real life example. So over here I have a real life example of the head and shoulders pattern. So if you can see here, the left shoulder, then the head forms over here, and then the right shoulder forms. So let me just draw a neckline for the pattern over here. So we will consider this as the neckline, and if I mark it more precisely for you guys, you can see this is the left shoulder. It ends over here, then the head forms over here, the head ends over here, and then the right shoulder forms here and ends over here. So you can see the right shoulder is relatively smaller to the left shoulder and the head, but that is absolutely fine. As long as you can identify the pattern, you are good to go. So now coming to the entry, exit, and the stop loss points. So we will enter right after the head and right after the neckline has been broken. So the neckline ends at 90.55. So and it broke on this candle, so we will enter over here, that is at 90.4, and our stop loss will be above the neckline, that where the pattern gets invalidated. That gives you a good risk to reward ratio and also avoids your stop loss from getting hit, because once this support region has been broken, it becomes a resistance area. So now coming to the target will be equal to the length of the head of the head and shoulders pattern. So you can see the head will start from here, from the low of this candle. So the low of this candle is 90.55, and then we will see how high the head has went. So the head has formed a high of 92.75, so that approximately comes to 2 rupees. So now we are entering at 90.4, so we will keep our target of 2 rupees. So we will subtract 2 from 90.4, which will be 88.4. So you can see how easily that target has been hit, and right from there, right after there hitting the target, the price started going towards the upside. So that is how perfectly price action plays out if you follow all the rules and trade accordingly. So now a quick revision of the head and shoulders pattern. So your entry should be where the neckline has been broken and a candle has been closed below the neckline. You enter after that, and your target should be the same length of the head, and your stop loss should be above the neckline. So now coming to the next pattern that we are going to learn in this video is the reverse head and shoulders pattern. So it is also known as the inverted head and shoulders pattern, and it is a bullish reversal pattern. So which means if the trend is going towards the downside, the pattern will form and reverse the trend towards the upside. So it is therefore it is called a bullish reversal pattern. And now the logic behind this, all the things are similar to the head and shoulders pattern, just the trends are towards the opposite sides. So coming to the logic, you can see a downtrend is going on, lower lows and lower highs are forming, and then the downtrend continues until this head forms, and then the price fails to form a lower high, and it stops exactly where it stopped in the previous high, and that is what shows us the weakness of the trend. But then again price goes down and forms a higher high, which confirms that the trend has become weak. And then when the price goes up and forms a higher high, breaks the neckline, that confirms that the trend reversal has taken place. Now let us discuss the entry, exit and stop loss points for the reverse head and shoulders pattern. So now taking a look at a real life example of the reverse head and shoulders pattern. So over here you can see the left shoulder, the head and then the right shoulder. So now the first thing that must have come to your mind is, why is the head not bigger than the shoulders? So that is the point. If I want, I can give you perfectly structured patterns, but I want you to understand and learn that the market will not give you perfect patterns. You need to adapt to the market. So I want you to learn what real trading looks like, and that is what I'm doing here. So you can see will be the neckline of a head and shoulders pattern, and this is the left shoulder, this is the head, and this is the right shoulder. Now when it comes to the entry, we will enter after the pattern has been broken. So this candle almost breaks the pattern, and then this candle opens above it. So we will enter on this candle to be specific. So this candle will confirm it, and we will enter at the opening of this candle. Now when it comes to the stop loss and entry will be the similar as the head and shoulders pattern. So our entry will be over here, that is 74.15. Stop loss will be below the neckline, and the target will be same as the length of the head. So looking at the length, 72.3 and 73.85. So the calculation comes to 1.55. So what we will do is add 1.55 to 74.15, so which comes to 75.7, and you can see how easily the target has been hit. So this was the reverse head and shoulders pattern, and a quick revision about the stop loss, entry and exits. So the exit will be the same length as of the head, the stop loss will be below and or above the neckline if you are trading head and shoulders pattern, and the entry of course will be when the pattern has been broken. So now the next pattern that we are going to learn in this video is the double top pattern. So you can see this is a bearish reversal pattern. That means a trend toward is going towards the upside. This pattern forms and reverses the trend towards the downside. So the logic behind this is simple. So you can see the price is coming, forms a higher high, forms a higher low, fails to form a higher high, shows the weakness of the trend, and then goes below and forms a lower high. So that confirms that the trend has reversed towards the downside. So the logic is very simple, but this pattern is one of the most powerful patterns. So and it is very commonly available on the chart. So you can, if you learn this pattern, if you master this pattern, you will definitely become profitable. So now let us take a look at a real life example and discuss the entry, exit and the stop loss points. So over here we have a real life example of the double top pattern. So over here you can see one top is formed and then the second top is formed. In this case the second top is smaller than the first top, but that is the whole point. The market rarely ever gives you perfect patterns. So you need to improve your identification skills and then trade accordingly. So let me just draw the neckline for this pattern. That will be at that will be over here. So in every single pattern we enter only after the pattern has been broken, and that is what we will do in this case. So this candle confirms the break of the pattern as it breaks below the neckline, and then we will enter at this candle. So let us initiate a short position over here. So our entry will be at 190.95, and when it comes to the stop loss will be above the top, and in this case this top is smaller one and the recent top, so we will consider this top. And when it comes to the target will be twice the length of the top. So measuring the top over here, the top starts at 190.75 and ends at 190.95. So that comes to approximately 2 rupees. So we will subtract 2 from 190.95, which comes to 188.95. So that is our target, and look how perfectly the target was hit by the trade. So this was the double top pattern, the entry, exit and the stop loss of the pattern. So a quick revision, the stop loss will be above the top, the entry will be after the neckline has been broken, and the target will be twice the length of the head. So now coming to the double bottom pattern, that is the opposite of the double top pattern. So it is similar. You can see a downtrend is coming, forms a lower low, forms a lower high, fails to form another lower low, which indicates the weakness of the pattern, which indicates the weakness of the trend. and then goes above, breaks, forms a higher high and confirms the pattern and the reversal. So you must be thinking that these double top and double bottom patterns are so simple. Yes, they are absolutely simple, but they are one of the most powerful patterns on the charts, and that is why I have included them in this video. And you can easily spot them. They are available very often when a reversal happens. So now let's get into the real life example. We will discuss the entry, exit and the stop loss points. So now looking at a real life example of the double bottom pattern. So you can see one bottom over here and the second bottom over here. So let me just draw the neckline for you guys. So this will be the neckline for our pattern, and then the pattern was broken with this candle, so we will enter at the open of this candle. So let me just adjust a long position over here, which will be at 72.95. Our stop loss will be below the head and our target will be twice the length of the bottom. So the top is at 72.6 and the bottom is at 71.2. So that comes to a difference of 1.4. So we will keep the target twice as that, which will be 2.8. So we will add 2.8 to 72.95, which comes to 75.75. So that will be our target, which was hit pretty easily. So this was the double bottom pattern. And even if you look at it like that, if you have watched the previous video, you can even term this as a ascending triangle pattern. So if you get patterns inside of patterns, that is even a better thing. That makes the setup more reliable, that makes the trade even more reliable. So now coming to the tip which will help you list out stocks that can give potential reversals in the short term. So all you have to do is come to the weekly chart and identify the trend of the stock. So you can see Apollo Tires is in a healthy uptrend on the weekly time frame. So what you will do is go to the short term chart and look for points whenever the stock comes towards the downside. So as the major trend is towards the upside and the stock contradicts that trend, it is eventually going to reverse and go to the upside. So what you will do is look for points whenever the stock comes towards the downside. So you can see the stock came down and reversed. The stock came down, reversed. The stock came down and reversed, and once again the stock came down and reversed. So these are the opportunities you will get if you use this method. You will get you won't get a lot of opportunities, but whenever you get, those will be reliable and highly successful. So this helped me a lot. I'm sure it will help you as well. And if you got value out of this video, make sure you like this video, share with your friends, and make sure to subscribe to the channel if you haven't already. Thank you so much for watching, guys.